they're 1,000 times bigger than what the Bitcoin market is.
Wow.
You look at what's traded on the forex on a daily basis, it's circa $7 trillion of trading. That'd be 100 to 1,000 times bigger than the daily trading volume of Bitcoin. All of that trading is going to migrate to Bitcoin at some point in time. And this is, on a really rudimentary basis. I look at this and I think, when there's absolute digital scarcity, when no Bitcoin is for sale and we have credit markets that are enabling anyone who wants to never sell their Bitcoin, we then get to a point in time when we achieve full hyperbitcoinization that no one in their right mind who's basically selling a good or service will take anything other than Bitcoin for that. And I look at this and I think today, in today's numbers, not to mention the inflation that's to come and the productivity boom that we're going to see with AI and all the other numbers that, basically show that this number will grow significantly over the next 10 to 20 years. We've got $7 trillion of daily global trade, and we've only got 450 Bitcoin minted on the day. By my logic, if we've got all of that Bitcoin tucked away that no one's selling, we need to facilitate $7 trillion worth of transactions on a daily basis with whatever's minted on the day. And so I look at that and think, this is where things are going to become surreal, because there's no way of really, and this is where, friend of the show and friend of mine, Jeff Booth, I think he's got the greatest outlook on it. You can't measure the new system from within because it's a completely different paradigm. We can talk about numbers all we want, but it's going to look completely different to what we think. All I can tell you is that number's going to go up significantly more than we think.
Yeah. And okay, so there's huge pools of capital that Bitcoin hasn't tapped into. Saylor's in the process of rolling out products that it's going to take him at least 4 years to educate the market on. When everyone realizes Bitcoin is a superior asset, a lot of that capital is going to go into Bitcoin. I'm trying to comprehend all the things that you're saying. And what is that process going to be like, Peter? Like, are most people that get exposure to Bitcoin, is it going to be through the ETFs? Is it going to be through Bitcoin Treasury companies? Is it going to be through spot Bitcoin? What's your take on that?
Oh, this is not going to be popular with the Bitcoiners. But I think we are going to have a Trojan horse with Bitcoin adoption, and it will come through the Treasury companies. If Saylor's included into the S&P 500, then every pension fund in the US is going to have that, whether they like it or not. So technically that would mean greater adoption than the spot Bitcoin owners. But I think this is a Trojan horse that basically puts another layer at the top of the funnel. They invest in this. They now all of a sudden have skin in the game, and then that's the impetus to basically learn about Bitcoin. And as we all learn about Bitcoin, we move gradually deeper down that rabbit hole, that we go from wanting some paper Bitcoin exposure, whether it's an ETF or through strategy. And then once you understand that, you realize, hang on a second, there's actually some really good things about this that is not just about number go up. There's actually some freedom go up technology to this too that I would like to have some control over. So I think it starts there. That's the broadest mass appeal that we can have, because that's the least friction to onboarding people into Bitcoin. And then once people learn about it, they then descend down the rabbit hole and turn into spot Bitcoin buyers.
Okay, so you think that the Bitcoin Treasury companies are a Trojan horse into spot Bitcoin? And then my question is, Michael Saylor's strategy, I think at 25x in a period of like 2 years. Would you recommend, if you had a client, would you recommend them buying strategy, or would you recommend them buying spot Bitcoin?
I'm a little bit biased here, but I recommend they buy spot Bitcoin. I think buying spot Bitcoin and owning that for, say, a minimum period of 8 years will give you a foundation of financial strength that you never knew possible, and a level of financial freedom that allows you to have full control over your assets and be completely in control of your future. I would start with spot Bitcoin, holding it for 8 years. Once you've got a base that is untouchable and you're completely unbreakable from a financial point of view, then I would go out the risk curve and look at something like strategy. Only once you're completely set up and and impenetrable, would I look at the other things? But the only caveat to that is, if you have capital that's stuck in a system that doesn't allow you to buy Bitcoin, then sure, the second best alternative, turns out there is a second best, and that is owning strategy shares.
Okay. And if the treasury companies are outperforming Bitcoin, why would you advise your clients to buy spot?
Great question. Because there is inherent risk with owning those treasury companies. Yes, they're regulated, but there is counterparty risk, there's regulatory risk, management risk. You don't know if you're going to have a 6102 attack where the government just says, hey, we really love this. We really love this. Bitcoin, we're going to assume the company and we'll give you basically cash for the Bitcoin that you're holding. All of a sudden you don't have it. The problem I see is you want to be financially independent first. Once you get that foundation, once you get that base, then you can go out the risk curve with anything else. But until you get your financial house in order, pursuing anything else looks to me to be an outsized risk, because there is additional risk to purchasing these treasury companies as opposed to just owning Bitcoin.
Gotcha. So it's more so about the with spot, you're not going to get rugged. And with the treasury companies, there is risk because there's government seizure risk, there's operational risk, there's company risks. So it's like focus on your spot stack. And then if you want to take on additional risk, that's where the treasury companies come into play. That's what you're saying.
Yeah, absolutely. And I look at this and I think, yeah, get the simple things done properly. And then once you've secured that, then you can have a look at it. And I'll just sort of, look at and discuss very briefly, the risks that are inherent with the treasury companies. 2 months ago, 3 months ago, the treasury companies were flying. Oh my goodness, look at the outperformance relative to Bitcoin. Unless you really understand the mechanics of the treasury companies, and this is something I find intellectually fascinating from a financial perspective, because we've never seen this. And being a Bitcoiner, it gives us a great insight into how these treasury companies are trading and how they're going to outperform. But, I look at this, and if you bought a treasury company 2 months ago, what you've seen with the MNAV compression, which is basically market cap over net asset value, has seen a total crushing of your equity in that stock, somewhere between 25 to 75%. You've seen your capital just evaporated. And all that comes down to is because, you purchased at a really high MNAV and you've seen a 75% compression of that MNAV. Now, the flip side to that is that there's opportunity if the MNAV's low and it expands dramatically to outperform Bitcoin, but you just need to understand the risks on the markets you're entering.
Yeah. And let's talk about the MNAV, because this is something that Peter, as a Bitcoiner, has been, as a humble Bitcoiner who takes a stack sats, stays humble, stays solvent, puts that Bitcoin into self-custody. All of a sudden, 1 year on Bitcoin Twitter, you just kept hearing MNAV, right? And, of course, I have to cover the news every day, so I have to educate myself on what MNAV even meant. But now you're seeing this compression of it, and I'm sure you caught this, Peter, where Saylor kind of changed the terms a little bit, right? And the MicroStrategy MNAV compressed to 1.5. What does that mean? Oh, and then not to mention that there are some companies that their MNAV is actually below 1, meaning it doesn't even make sense, because the whole point of owning a treasury company is because you think you're going to outperform Bitcoin. But if it's below 1, you're not, by definition, you're not outperforming Bitcoin. So what's your opinion on that? Because the way, from where I see it, Peter, and again, I lack the experience that you do in traditional markets, but I was around for the 2016, 2017 era, and I was around for the 2021 era. And I do remember that every single cycle, there is the thing that outperforms Bitcoin, right? So the 2017, it was the ICOs. The 2021, it was the layer 1 altcoins. And the 2025, I said this at one of the conferences I said this, and they got boos in the crowd and whatever, but I'm sticking to it. It seems like the ICOs of this cycle are the Bitcoin treasury companies. Now, does that mean I'm talking about strategy? No. Does that mean I'm talking about 21? No. Does that mean I'm talking about Nakamoto? No. I don't think any of those guys are going to go anywhere because of the backing that they have. Like SoftBank SoftBank and Tether, they're not going anywhere, right? But the smaller ones, right? The ones that take more leverage, they cut more corners in order to even get close to the big guys. I think that we have a downturn of 40 to 50%, and you might see a domino effect of a lot of these companies start to unravel. So like I said, I don't have experience in the financial markets, but I've been in Bitcoin for almost a decade now, and I've seen this story before. It looks very, very familiar. Peter.
Looks like a duck, walks like a duck. It's probably a duck.
Exactly.
Yeah. It feels a lot like that. And the only hesitation I have and nuance I'd like to add to that is that we have a buyer of last resort in the very strong treasury companies. So I think when you see huge appreciation in values, when you see outstanding performance in stocks, you're going to get the copycat effect, and you're going to see a whole lot of people enter the market without the relative experience or training or guidance or ethics and values that led to the success of their predecessors. So I think it's inevitable that we're going to have a whole host of these companies fall on their face. But why I think this is a little bit different to the previous cycles where it's been, say, Bitcoin miners, ICOs, DeFi, meme stocks, whatever you want. Twofold on this. Firstly, the underlying asset that they're purchasing is Bitcoin. And secondly, there's a perpetual bid from the strong companies in the space that if those poorer managed company ever fall below a 1 MNAV, there's a buyer of last resort. Think about this. Saylor can pick up these companies for a huge discount on what he'd have to pay on spot market Bitcoin if they ever get into trouble. So I look at this and I think as stupid as people will be in chasing these returns elsewhere, there will be a perpetual bid on it, so they won't get too hurt because the underlying asset that they're buying is Bitcoin. So I think it's very different to the previous cycles that we've seen. I actually think it represents a huge opportunity for the best treasury companies in the space to pick up discounted Bitcoin well below fair market value.
Oh.
And we're going to see those opportunities come up.
That's very interesting. So you think, wow, okay. So you think that but even the smaller ones, even the smaller Bitcoin treasury companies, you think that if they go below a 1 MNAV, you think that's a good opportunity?
I think it's absolutely a huge opportunity, depending on how quickly that they're accumulating Bitcoin and whether or not they can keep it. Obviously, want them to be operating in an ethical manner. One thing that I think's really been blown out of proportion in this space is the fear that Bitcoiners have had paying for a really high MNAV. And what's very difficult to understand about this, and this is putting a TradFi lens on absolute digital scarcity network asset of Bitcoin, is that this MNAV, you've got people who are paying, say, 2 to 5 times asset value for a purchase of a share. So what that effectively means, if you want 1 Bitcoin exposure in some of these companies, you're going to have to put in somewhere between 2 to 5 Bitcoin to get 1 Bitcoin exposure. Now, if the market stays still and they never accumulate another Bitcoin, that is the worst deal in history. You've effectively lost somewhere between 30 to 80% of your Bitcoin by doing that one trade. What I think gets lost in this is the best companies in this space are accreting Bitcoin per share so quickly that MNAV that you paid gets eroded very quickly. And so the thing I look at in assessing the viability of this moving forwards is, what's the MNAV that you're currently paying, and how quickly, on a risk-adjusted basis, can they increase their Bitcoin per share to get your adjusted MNAV down to 1? So if you pay 2 times MNAV, how quickly are they doubling the Bitcoin per share to get your adjusted MNAV down to 1? Because once it gets to 1, any Bitcoin they add per share is now accretive to you as a Bitcoin. Let me give you an example. If you've got 10 Bitcoin and you buy 10 Bitcoins worth of MetaPlanet stock today, and you're paying a 2 times MNAV, you've effectively halved your Bitcoin. Now, that's a huge disadvantage. Why would anyone do that? Well, let's see what they can do with that Bitcoin per share over the next, call it 2 years. They're expecting to increase their total Bitcoin treasuries by 10x in the next 2 years. And they're only going to have to dilute that by 40 to 50%. So you're getting a 5x return in Bitcoin per share, and it's costing you 2 times per share. So effectively, by my maths, simple, in my head, I'm looking at that and thinking, well, if you're willing to take that risk and you've got money or Bitcoin you're willing to burn and lose forever, if you take that risk, there's an opportunity that you can 2x the investment that you made in Bitcoin terms. And this is where all of the investments that I look at now have a hurdle rate of Bitcoin. So you need to outperform Bitcoin in order to justify any investment.
Of course. Wow.
But therein lies the potential opportunity of the Bitcoin treasury companies. But having said that, a lot of people are going to get burned on this. And this is why I just say the greatest message in Bitcoin is just stay humble, stack sats, go buy Bitcoin, self-custody, and let the future take care of itself.
Absolutely. I think that's the core message. And I say it every single day. Just take Bitcoin to self-custody. Even with just spot Bitcoin, right? You're laying out 100x in 10 years, 10x in 5 years, which, by the way, I completely agree with those predictions. I mean, what other asset in the effing planet is going to give you that type of opportunity? That 100x is life-changing for most people. And I think just, it's people just haven't experienced this, so they don't understand. Like, it's incomprehensible, right? But yeah, I agree, especially with, again, the regulatory clarity that's happened, the amount of institutional interest. And you said something very interesting in the beginning of the podcast, Peter, which is, this is the first time all the stars and planets are aligning for something that is absolutely scarce. That has never happened in world history. Gold is scarce, but it does have an inflation rate. The production of gold increases if the price of gold goes up. The production of Bitcoin does not increase if the price of Bitcoin goes up. Actually, it gets cut in half every 4 years, no matter what. So yes, I completely agree with you. That shock, I think, is going to hit the world by storm.
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending, with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially, what they do is that they help their clients unlock the liquidity of their BTC, allowing you to HODL while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledn.io today.